All right, guys, in this video, the much overdue GameStop 10K and Q4 review, going through the financials, what I liked, what I am still cautious about, and what my trading plan is for GameStop. Let's get this done before its next quarter. Now, I read through all 70 pages of this report a week or 10 days ago when it came out, and I'm just delinquent on getting this information out to you guys. I'm going to keep it very brief and high level. Let's start off with the balance sheet. What is not to like about this? Total assets, $3.1 billion, a slight reduction from last year, but that is mostly because they reduced the inventory. A great cash position ending the year, January 28th, 2023, $1.13 billion in cash and $251 in marketable securities. Total current assets, $2.3 billion. Very good position compared to the total current liabilities of $1.33 billion. Long-term debt, only $28 million. And then when we go down to the bottom of the balance sheet, we can see retained earnings, negative $219 million. It had gotten as low as minus 267, I think, last quarter because of several quarters of losses. And now they are coming back up out of the hole. So it's not positive, but it is going back in the right direction again. Total stockholders' equity, when we take total assets minus total liabilities for the year, ended up at $1.32 billion. We are going to look at quarterly results because I don't want to get mired down comparing 2022 to 2021, but just for the sake, since we have it here and that's what they're showing, there was a slight decline in net sales, 5.9 billion versus 6.0 billion for 2021. That's a negligible impact, and at the end of the day, they had a net loss of only 313 million versus 381 million last year on pretty much the same net sales. So they definitely did the hard work to cut down the costs in the business in 2022. They are moving the right direction. Quick look at the cash flows. We have a positive cash flow here, 108 million provided by operating activities. That is excellent. On the cash flows from investing activities, minus $222 million. Not a big deal at all. That is from 55 million on capital expenditures and this 276 million from purchase of marketable securities. Nothing to worry about here. Moving on to cash flows from financing activities, we have negative 7.9 million. There's literally nothing to worry about here. No dilution, no debt taken out. Very good, solid statement of cash flows for GameStop for 2022. Cash at the beginning of the period was 1.3 billion. End of the period is 1.19 billion. All right, let's switch over to looking at the quarter to quarter comparison. Put a couple bar charts up for you so you can get a visual of how things are going. We'll talk about what I think is coming up next for GameStop and then a quick look at the chart, and we'll send you on your way. If you're wondering about the stock price and why this company is still being shorted even though they have no debt, I hear that question a lot. Let me clue you in on what Wall Street is looking at. We'll just finish up here on the annual chart. On the annual revenue, it was down a little bit from last year. So that is one thing that Wall Street is going to want to see. Revenue going up. GameStop is closing stores, so that is going to be something that, you know, people are going to have to come to terms with. Revenue might be flat for a while as they close down non-profitable stores. So then the story becomes, okay, then what can you do about earnings? If your revenue is going to go down, can you turn a profit on those stores? So then when we come to earnings, it is still negative. And that is what is dragging on GameStop still at this point. Although you can see that curve there, they're making their way back to zero, but $313 million is not zero. It's still better than some other companies are doing on an annual basis, right? That's only 313 over the entire year, but they still have some work to do. That's not me being negative. That's just saying if you're wanting the price to skyrocket on GameStop, we need to get back to a profitable year on net income. All right, moving on to the quarterly. Let's look at that same bar chart for gross revenue. We don't need to beat the horse to death about the decline in revenues from 10 years ago. Really what we want to know is in the last 2 or 3 years, how is it going? 2022 was better than 2020. In 2022, the first quarter was the only one that did better than the year prior. But I mean, for the most part, we know that 2022 ended up flat compared to 2021. What is going to happen for gross revenues for GameStop going forward? That is going to be up to executive management. Are they going to transform the company, or is it going to be more like what it's looking like now? They're going to slow down on the NFT and digital stuff and redouble their efforts to make these stores profitable. Either way is fine with me, whatever they need to do to get the company profitable. Of course, I'd like to see them take the company to the next level, and I will be following it to see what happens in regards to that. Gross profits for the quarter, clear standout Q4 2022. Look at that last bar. This is good news. More of those, please. And same thing when we look at net income, you can see that very last bar, $48.2 million net profit above the line. That is exactly what we want. More of those, and at the end of this year, GameStop is going to be banging. One other thing that I wanted to mention from the 10K is about the store closings, because I knew there was a lot of them going on. It was actually less than I thought that it was. Net change for the US, Canada, Australia, and Europe was minus 160 stores. There are about 1,700 leases coming up for renewal here in 2023, so maybe that number will increase in 2023, and that's fine. Hey, a business needs to take a hard look at every store, and if it's not operating profitably, cut that fat. And that, if GameStop does that, I'm totally cool with that. Stick to the most profitable locations. Make sure every bit of square footage is working for you to turn a profit. As of today, Monday, April 10th, the short interest on GameStop is 21.72% with 58 million or so shares out on loan. Cost to borrow average 13.6%. Cost to borrow max 64%. All right, if we look at my visual cheat sheet of is this company doing well or not? How is Wall Street viewing it? Again, if we compare it to a gold standard like Costco, where all of these boxes are green, I have very set criteria of how I color these boxes. There are still a couple red ones, a couple flip to green. I marked the company now as cash flow positive, so this box right here went into the green, and I marked earnings per share momentum as green because we have a positive quarter and it is improving. Hopefully, we'll find out next quarter. The red boxes, the company's still not profitable on a year-over-year basis. I'm not going to mark that box yellow or green until we get more than one profitable quarter, but they are on the way. But, you know, one of the reasons the price of the stock is kind of stalling out is Wall Street is looking at it much like I am. Can they repeat this in ongoing quarters? Can they show that they are a profitable company in more than just their biggest quarter of the year? So stay tuned for that. Hopefully we flip this green later on this year. Revenue growth down minus 1.39%. That is also still keeping a red box, and return on equity minus 21%. Short interest is high. That is indicative of the fact that Wall Street is still reflecting negatively on the potential of this company. Guys, that can change with a couple of profitable quarters. The company has no debt. They had a profitable quarter. Wall Street is wanting to see some repeated performance on what happened on Q4. When and if all of these boxes flip green and those last couple issues are resolved and we get multiple profitable quarters in a row, this stock is going to have some legs to go up. Okay, this video is getting way too long. Let's wrap up with some TA and my trading plan for GameStop. If this is your first time here, I'm going to do a quick recap. If you've been watching my channel for a long time, you already know this stuff. After the stock split back in August of last year, when it ran up, I sold into that. I set my zone of where I'd like to buy back here in yellow, and said that if it dropped below that, I would increase my buys even more. It did drop back down into that zone. I bought some in September. I bought some more in October. And then I really bought some in December when it got down to 22 bucks. I did not buy it at 15. Oops, I probably should have. I should have tripled the boat at 15. Won't make that mistake again. Look at that. I had two chances to buy at 15. But we got that bump here on March 22nd, almost to $27 or so. And I was hoping it would be a multi-day bump. That did not work out. So I did not sell at the peak of $26, $27. When I saw that it was starting to fall the next day, I was still in the green. And so I went ahead and sold my entire position and got a profit, not as much as I could have if I would have sold it at $26 or $27, but I locked in a profit because I thought that it was going to come back and try and fill this gap. Unfortunately, that is what I think. Not that I think there's anything wrong with GameStop, but I think that Wall Street is going to be very patient with this stock and expect to see multiple profitable quarters before they really run it up. So I will be buying GameStop again when it comes back down to fill the gap. If it hits 18 or 15, beautiful. I will triple my position at that point, because not only do I have all that cash sitting here now, but I have cash plus profits. If I'm wrong and it doesn't go down, I will be looking for some confirmation that we are in an uptrend before I buy back in. What do I mean by that? Several days of green candles plus the moving averages telling me that we are in an uptrend. Right now, today, GameStop closed at $22.38. I sold at $24.25, and it's only been going down since I sold. So for me, I think I made the right decision. If a fantastic news announcement comes out tomorrow, then obviously I will be playing catch up at that point, but I'm willing to take the risk. Bottom line, guys, I think GameStop is going to be fine if they can stack up a couple more profitable quarters. If you're a buy and hold type person on GameStop, I think you're probably in good shape. As I told you guys about a year ago, I switched up my strategy on GameStop to a trading strategy to take advantage of understanding the momentum, and I'm going to continue with that for the short term anyways. So that is the plan. If it fills the gap, I'll be buying some more. I'll be buying even more shares than I have before. I'm a small channel. I'm a small trader on GameStop. Don't worry about what I do. It's not affecting GameStop or anybody's position. Just letting you know what I'm doing. That is not trading advice. Don't ever take buy, sell, or hold advice from anybody on YouTube, Reddit, or Twitter. Do your own due diligence. Do what feels right to you. As always, guys, thank you for your time. Thank you for watching. I hope you got something out of this. Even if you didn't agree with all of it, that's cool. Let me know what you think down in the comments below. I am Tony Denaro, and I will see you on the next video.